Good morning, everyone. Hello, everyone. We today, 18th of June. Everyone's welcome on our Russian credit rating discussion. Before we start, some technical issues. So you can, I hope you can hear me. So we have already connected Mr. Schepp, chairman of the German-Russian Chamber of Foreign Trade, AHK. I hope Mr. Schepp can hear us as well. Also, we already have a connection of all participants. So if you have any problems with the sound, so please restart the page. Also, we would recommend you to use Google Chrome. So if you can hear me well, could you please put the plus on the chat side on the left? So yeah, great. Yeah, so great. Also, if you have any questions, please submit them to the Q&A part of on the right upper side of your system. So we're waiting for more participants. And I would like to present our today's speakers. So the webinar will start with a welcome speech from Mr. Schepp, chairman of the German-Russian Chamber of Foreign Trade. Matthias have a very interesting topic to talk about, why the crisis is great. Then we have the main presentation of today's webinar from our rating analyst, Smirnov. He will tell about the Russian credit rating, the recently updated by our rating agency. Then we have the very interesting topic from Stanislav Mourashov, the economist for Russia of Raiffeisenbank. He will talk about the Russian macro trends and prospects for this year. Then we have a presentation about the current trends in Russian economy from Kirill Kononov, senior analyst of Gazprombank. And at the final stage of our webinar, we have the presentation from Sergey Smirnov, deputy director of the Central Development Institute of Higher School of Economics. And he will tell about the COVID-19 recession in Russia, some consensus focus from many institutions. So we have very interesting speakers today. Okay, then we would like to start with a presentation of Denis Anohov, our rating analyst, since we have some problems with Mr. Schepp, so he will join us after Denis' presentation, and then we will go through all our agenda for today.
Yeah. So good morning, everyone. Yeah, we will start with discussion and presentation of Russia credit rating. So, and before moving to the main topic, I would like to introduce briefly our rating agency. RAEX-Europe works in Frankfurt since 2013, and we are registered by ESMA, which means that we have all assets rated by us are useful for regulatory purposes in the European Union, and also as of April 2018, we received the mapping from the European Union Commission, which is also useful to compare our rating with the ratings of other credit rating agencies. RAEX-Europe assigns credit ratings to sovereign issues, and also we assign non-credit ratings, namely ESG ratings and green and social bonds second opinions, as well as we provide industry and economic research and organizes business events. And on the 12th of June, RAEX-Europe revised the credit rating of Russia and confirmed it at a BBB- level in national currency and in foreign currency, which means a moderately high level of creditworthiness. At the same time, we changed the outlook from positive to stable. Given the current economic downturn and future uncertainties caused by COVID-19 outbreak, a number of factors in our assessment were changed from positive to restrictive. And now we will discuss these factors. Let's start with the breakdown of positive factors. The first positive factor is an effective and consistent monetary policy with following a floating exchange rate regime and inflation targeting. At the end of 2019, annual inflation slowed to 3% below the central bank's 4% target, and this trend was driven by slowing of domestic demand. So 75 basic points, as you see on the left graph, and currently we see the disinflationary effects of they prevail in the economy and comes from a significant decrease in demand due to the uncertain basic points, as you see on the left graph. And currently we see the disinflationary effects of they prevail in the economy and comes from a significant decrease in demand due to the uncertainty surrounding the pandemic in Russia and globally. And in this situation, we expect that the central bank to continue reducing the key rate. Also, we expect annual inflation to remain close to target of central bank 4% by the end of this year. The second positive factor, and we assess positively the strength of the external position of Russia, taking into account the flexible exchange rate and accumulated foreign exchange reserves, which increased the resilience of the Russian economy to the current shocks. This is confirmed by the dynamics of international reserves, which continue to grow and amount to almost $570 billion as of May 2020. And these reserves fully covers the external debt of Russia. In addition, stabilization of the ruble exchange rate is supported by currency interventions from the National Welfare Fund according to the budget rule mechanism. And the next positive factor is the low government debt. In 2019, the gross government debt is estimated at low levels, only almost 15% of GDP and 41% of budget revenues. As you can see on the right pie chart, the largest share of the debt consists of domestic sovereign bonds, while the share of foreign currency in external debt is only 20%, which possess low exposure to the currency risk. In addition, the debt has favorable maturity structure with the short-term liabilities up to 1 year at only 7% of total debt. The low level of debt creates a possibility for the government to raise additional funds to cover the unexpected expenditure this year and shortfall in budget. Meanwhile, the government follows the conservative debt policy as the budget rule limits the amount of new borrowings for the government. And the main source remains the issue of domestic bonds, and we project a moderate rise in the new borrowings during this year. Now we will move to the restricting factors. We observe the slowdown of GDP growth in 2019. It reached only 1.3%, mainly caused by a decline in export due to weak external demand, as well as a restriction by OPEC Plus agreement. In our previous forecast, we expected acceleration this year. However, after the dramatic events on the oil market and the influence of restrictive COVID-19 measures in the second quarter, business and consumer activity in the Russian economy significantly declined. Looking ahead, we consider that with the relaxation of quarantine restrictions, economy activity will gradually recover. However, the projected GDP decline this year may reach -5%, -6%. The prospects for growth recovery will largely depend on the scale and effectiveness of government measures to support the economy. The competitiveness of the Russian economy and business efficiency are also limited by the institutional weaknesses and significant footprint of the state. Even though the position in doing business ranking is improving, as you can see on the left chart, The country has high corruption, still high corruption in public sector, and according to the Corruption Perception Index, Russia ranked only at 137th place out of 180 countries. Also, foreign investment continued to be constrained by sanctions and downturn in the global markets. And net FDI inflow last year were higher than 2018, as you can see on the right chart. However, it was due to technical flows, primarily due to technical flows between companies and their overseas shareholders. And the next restricting factor connected with the budget position, and it reflects our view about transition from surplus to deficit. In 2019, the consolidated government budget was in surplus almost 2% to GDP, supported by strong non-oil revenue growth, which compensated the decline in oil and gas income. Already this year, we observed a significant decline in both oil and non-oil revenues. Moreover, the anti-crisis measures of the government include a number of tax relaxation, which will further reduce tax revenues. On the contrary, budget expenditures are expected to be increased, and the government will help stimulus fiscal policy. On the other side, the significant portion of National Wealth Fund, as you can see on the right chart, is encouraging. And the funds were estimated at favorable 11% of GDP as of April 2020, and reserves which exceed 7%, which can be used to support public spendings. However, the ability to use these resources is limited by the current budget rule restrictions and can only compensate shortfall of the oil revenue. As a result, in this year, we anticipate a transition from a surplus to a budget deficit that may exceed 5% to GDP, but also the size of this widening of this deficit will depend on the scale of expenditures for the supporting of anti-crisis measures of the government. And the next restricting factor is the current account position. The current account surplus contracted to almost 4% of GDP in 2019. It was influenced by decline in export, whereas the import remains stable on the levels of the previous year. In addition, there was outflow as Russian companies increased dividends payments to foreign investors. This year, we expect the trade surplus continues to shrink more sharply, with deep export contraction caused by a drop in world commodities prices and overall worsening of external demand. Also, the total capitalization of the stock market at the end of 2019 increased to 44% of GDP. However, it remains below the levels of developed countries. Besides, the stock market is now experiencing a period of high volatility, as you can see on the right chart. It traditionally highly concentrated on the commodities export companies. The next couple of restricting factors are connected with banking industry. As you can see on the left chart, banks' total assets increased, and loans activity also was increasing last year. However, the assets of banks to GDP has declined below 90%, and domestic credit to GDP ratio we estimate at 55%. That reflects the weak inclusion of banks in, first of all, in corporate lending. In 2019, banks' soundness indicators were improved, but worsening economic situation creates certain risks for the financial sector. In terms of profitability, banks improved their ROI and ROE last year. However, we expect that banks to be less profitable in 2020, with significant decline, first of all, in interest income. And already now, first quarter, we see that in the share of loss-making banks has almost doubled. From the positive side, the capital adequacy in the banking sector stood at favorable level, 12% as much, which is higher than the minimum requirements for systematically important banks. Moreover, banks also have additional capital stocks up to 5% of assets, which can help them to absorb possible losses in the future. And now we are moving to the negative factors, and we continue with the quality of loans in banking industry. By the beginning of 2020, as you can see on the left chart, the banks improved the quality of its loans portfolios. The level of NPLs decreased to 9.3% against 10% a year earlier. Also, it was connected with that expansion of risky unsecured consumer lending began to slow down under the restrictive measures implemented by the central bank. However, in this year, we expect an increase in NPLs due to the worsening of financial situation and defaults of clients caused by the corona crisis. In order to mitigate the consequences of losses, the central bank has started a relaxation of reserve requirements for loans, and this year Russian banks have already restructured up to 5% of their total sector loans as of June 2020. So this year we expected a high deterioration of this indicator. On this slide, you can see the additional stress factors we will take into account, and these factors reduce the credit rating. First, high dependence and concentration on the oil and gas industry remains. As can be seen in the chart for 2019, the share of oil and gas industry exports was almost 60%, while the share of oil revenues in the budget was 20%. And the second stress factor, which remains, that it's connected with the sanctions risks. We shouldn't forget that the economy is still operating under restrictions. Plus, last year were new sanctions regarding Nord Stream 2 and possibility of new sanctions on government sector. And finally, I would like to finish with a sensitive assessment of the possible developments. The developments which could lead to an upgrade of our rating. First, increase in the oil prices higher than anticipated, which support GDP growth and the external trade position. On the other side, faster and stronger than anticipated recovery from the current economic crisis due to contribution of non-oil industries. And in addition, relaxation of sanctions regime could improve the investment climate. And the developments which could lead to downgrade, first, significant deviation from current monetary and fiscal policies. Secondly, the worsening of the banking industry indicators. And finally, the escalation of sanction regime. And we will keep monitoring the situation, and the next our rating action for Russia will be at 11th of December this year. Thank you very much for your attention.
Thank you very much. So basically, because we have this pause, so if you have any questions, so I just remind you to put it in the Q&A part. So basically, we would like to highlight just at the end of the Denis presentation that our rating action was performed last Friday, and the main rating action we did for the sovereign rating of Russia was the changing of the outlook from positive to stable, but the rating remained the same. The BBB minus, which is the lowest level of so-called investment grade. Our next speaker, so I hope we already tested with Stanislav and we don't have any sound problems. So Stanislav, he is the economist for Russia from Raiffeisenbank. Can you hear us, Stanislav? Can you join us with the microphone already?
So I can proceed, I think. Actually, my topic is connected with the brief outlook of the Russian economy for the up-to-date situation. And well, I think that's what I have to say. The data comes we see rather controversial data. We may see rather controversial data coming up, and but now, generally speaking, the overall picture seems to me rather positive. We can say that the recovery is already in place, and the main shock came in the April and in the first week of May, I should say. But it depends on the sector where we talk about. But still the shock is already, let's say, fading out, and the recovery is in place. If we see the dynamics of first of all the industrial production, we can see that the manufacturing industry has already started to pick up, and we see that the month-on-month seasonally adjusted growth is already exhibited. And we believe that in the upcoming months, in June, in July, we may see even more optimistic situation. I have to note that in May there was still 2 weeks of quarantine restrictions. So, for instance, I think that in June the manufacturing industries may recover significantly. Though we see that still Russia is suffering from OPEC Plus agreement cuts, and we see that the overall index of industrial production actually declined in year-on-year terms in May, and we can see that the main factor was with these OPEC oil cuts, which actually contributed at 4 percentage points decline in the industrial production in May. And actually we see that all the two negative factors, in my opinion, that came that impacted the Russian economy, I mean the OPEC Plus agreement and the Corona crisis, both of them were significant, but the effect, the extent to which the quarantine measures affected the economy seemed to be not that harmful, because we expected this sharp decline in the economy, in the production, in the consumption, but we see that the quarantine measures were not that strict, and the extent to which the industrial production fell was not that significant. Although the OPEC Plus is still a matter, and it will be seen for at least 3 months in the data, will contribute negatively to the industrial production. Well, we see that still this is an issue, but the overall recovery from the Corona crisis is rather notable. If we talk about the situation in the consumption, in the consumer sector, we see that it actually fell off the cliff in April, but this was not a piece of news, because the main restrictions were connected to the retail segment, and actually we see why the retail segment suffered that much. But we already see, using the data from the leading indicators, that the recovery is rather significant in month-on-month terms. We may see that the statistics for May in the consumer sector will be more positive. The decline will shrink to somewhat minus 15%, I think, from minus 30% decline in April. Basically, the fiscal policy seems to be rather conservative, and this was the main object of the main matter of criticism from the economists, from the business, because we see that in the Western countries, the extent to which the government supported the economy was rather significant. it accounted, let's say, several percentage points of GDP, though in Russia the extent of the amount of the support was not that high. And if we talk about the real cash support, it is even less than one can imagine. So, well, both of the two plans announced the support plans announced recently were actually containing mainly the subsidies for loans and the state guarantees, while the direct payments for the companies and for the households were actually insignificant. And the plan that is designed to take the economy out of the crisis, so the third plan actually, well, it is also contains mainly investment-related parts. So, well, the parts that are the measures that are related with the investment projects, not with the small and medium enterprises, not with the households. So, well, we may see that even with such low support from the government, the low support for the small and medium enterprises, the recovery is still rather okay, I should say. So we do not see a slump in manufacturing. We do not see a slump in the economy. The decline of the GDP in April was 12%, according to the Ministry of Economic Development. It might go further in May, but overall we see that the situation is not that dramatic as it is in, for instance, several Western countries where we can see the decline in about 30% of GDP year on year in the second quarter, the main question now is actually what will be the speed of recovery of the Russian economy? What will be the speed of this recession egress? And I see that, even though the situation now seems to be rather optimistic, it will take time to recover from this crisis. I think it will take us 1.5 to 2 years to recover to levels of let's say December 2019, and this will take time. And this actually definitely will be not that positive for the Russian economy. But still, the recovery is going on, and we'll monitor the situation in these spheres. If we talk about the monetary policy, we see that the Russian central bank acted. Its reaction to the crisis was not typical. If we take the history of its actions before, and we can see that its ability to smoothen, to soften the monetary policy is on one hand can be easily explained by this sharp decline in the Russian economy, but on the other hand, the extent to which the monetary measures help the real sector are not that considerable, actually, I should say. So, comparing to the Western countries. So, we see that the story with the softening of the monetary policy of the central bank is mainly connected to the necessity of the financing of the budget deficit, which actually occurred during this crisis. So, what I'm talking about is we see that the main factor of the softening of the monetary policy is connected to the need of new OFZ placement, new Russian ruble-denominated government bond placement, and so to fund the budget deficits, whereas the National Wellbeing Fund, which is rather considerable now. So, well, Russian authorities don't want to use this safety cushion fully this year because, well, there is a serious concerns about the second wave of the crisis. There was second corona crisis hit. So, well, these safety cushion can't be used fully this year, while the amount of the fiscal deficit appears to be rather high. And well, I think that the main factor for this softening of the monetary policy is to make the Russian OFZ more attractive for the local banks, for the local investors, to make these placements high and to fund the huge budget deficit. So, well, according to our estimations, given the oil price of 35 and other negative factors, we see that the deficit will be around 4.5 ruble trillion. Though we see that now the prospects for oil price recovery are more solid, and well, we see that given the oil price of 40 USD per barrel, we see the lower budget deficit about 3.5 trillion rubles. Though it is also a considerable deficit, and Russian government is still, according to our estimations, has intention to fund it with the OZ placement. Given that, we see that there is a potential for softening of the monetary policy, although there may be the central bank may be not that dovish as it stated previously, though there is a potential for monetary easing. Our key rate forecast by the end of the year is about 4.4%. 4% by the end of the year. If we talk a few words about the situation with ruble now, so well, we see that the ruble is rather strong now. On one hand, the oil price recovery helped somehow the Russian currency to rebound, but on the other hand, the main factor of this strength is extremely low imports. We see that the imports declined significantly, especially the imports of services. And we see that this is a main factor of actually ruble stability and ruble strength. Given the situation going forward, so we see that there is a potential of ruble depreciation in case of softening of the currency measures and full recovery of the economy. So, since the imports will start to recover, the ruble will start to depreciate somehow. Of course, given the oil prices. So, the oil price, according to our forecast, is unlikely to recover to levels above 45 USD per barrel for this year. So, given that, we see that ruble is likely to depreciate to the levels above 70 USD per ruble USD. So, about 70 to 75. This is a range that is okay for the listed forecast of the oil price. Given the sharp recovery of imports. So, now we see the strong ruble because import is rather low. But this is only a start of recovery. So, in the upcoming months, we may see the recovery of imports. And now we actually saw statistics for the latest statistics for imports. We see that some parts of the imports, namely related to the investment side, also started to recover. We believe that this is a factor of national projects that government proposed, and this may be a trigger of further imports recovery in the upcoming months, which may be a negative factor for ruble. Though nothing seriously negative we expect. So we don't expect ruble to go to 80 again. Overall, the picture is is slightly better than we expected for both ruble, for both the real sector. Though we have to wait and see, because the statistics may be rather controversial, situation is changing actually. That's all from my side. Thank you.
Thank you very much, Stanislav. So we have time to ask you some questions. Actually, I would like to ask you a question. So when do you expect the Raiffeisenbank can provide the next macroeconomic forecast for Russia, which we can read in paper, because you already mentioned that situation is changing very fast. So what's your estimation for the next macroeconomic forecast review from your institution?
Actually, we have the current forecast. It is in place, but the point is that the figures, the interpretation of the dynamics of the figures can change somehow. So, for instance, we still expect now for this year the GDP decline at let's say 5% year on year. We expect the key rate at 4%. We expect the decline in consumption at -6%. So the industrial production will exhibit less negative dynamics, so about 3 to 5%. Our forecast is already in place, but still I was talking about the interpretation of the dynamics, because we see that there might be some rebounds and upticks that we did not expect. For instance, the situation in May was not that negative as we expected. So, for instance, that's why we have to refresh our interpretation of data. But if our forecast, so our figures remain unchanged. So we did not change our forecast for 2020. Thank you.
Thank you very much. So we hope that now Matthias can join us finally. So Matthias, place is yours. I hope you can.
Yeah, I can hear you, but I'm not sure whether you can hear me. Okay, so best greetings from the office of AHK, of the German Russian Chamber of Commerce here in Moscow. And my topic is why crisis is good. Let me share with you in the beginning, and only with you, some preliminary results of how our 900 membership companies are feeling these days. We will publish this survey we did 30th of June in a couple of days, in 2 weeks. But my staff prepared already some preliminary results. So what do we see? Of course, we ask our companies, what do you think how the Russian economy will do this year? And 38% think there will be a decline in GDP of up to 5%, and 45% think it will be up to 10%, and 15% think it will be even more than 10%. Then, quite interesting, we ask them what do they think how their companies are doing. Most of the companies who answered, around 90%, are German companies, and most of them are not in the consulting business, but in real in industry and logistics and financing some companies. And the other result is quite good. All in all, 2/3, 70% of the company are saying the situation is satisfying for the companies, or good, or even very good. 38% say satisfying, good 25%, and very good 7%. And 26% are saying situation is bad. We ask how do they consider the help packages of the Russian government to be sufficient or not. Only 15% say they are sufficient, and not sufficient 59%, and not sufficient at all 26%. So there's quite some dissatisfaction with what the Russian government is doing. And then we ask, are they going to hire or people, or are they going to set off people? And result, not too bad. 60% are saying they leave their staff at the same level which is now, and 14% saying they will hire more people, which is all in all 2/3 of the companies saying remaining at the same level of staff or hiring more, not too bad. And 23% plan to set off staff up to 10%. And only 5% say we will release people up to 25%. I think this is very typical for German companies and their social-oriented way of doing business. All in all, as in every crisis, our companies are doing better than the market. So in this sense, crises are good for German companies. To me, no surprise, because in general they are very well managed, and they have motivated co-workers and know the Russian market well. Why crisis is good for or can be good for a company? Let me talk 3-4 minutes about AHK. From the very first moment, I was defining our strategy as times of crisis is a time of the chamber, because we are very, very much needed. If things go well, then business associations like ours are not needed. Yeah, maybe still for a networking platform, coming together, getting new contacts, but our core reasoning is lobbying, and lobbying is very much needed. If you only look at the dissatisfaction of foreign companies and German companies with the health package of Russian government, that's clearly something we are conveying to the government and to our partners in the Ministry of Industry and Ministry of Economics, and to Prime Minister Mishustin and to Mr. Areshkin in the Kremlin. Also, we are working basically day and night to get more foreign CEOs who are now in Germany or Western Europe back to Russia, and not only sport trainers who are allowed to come back. We think the general manager of Volkswagen Russia with an investment for 1 billion euro and 6,000 employees is no less important than somebody training a soccer team or another sports team. We at the beginning of the crisis, we were not sure whether we can increase our membership, because our companies are facing in general more financial restraints, some even a financial crisis with their turnaround declining, and so we were a little afraid that membership numbers might even decline. And now, after 3-4 months in Corona, we see that our best hopes were even surpassed by the numbers. We up to today, we have an increase of membership compared to the increase, so not the total number of 900 members, but how we were growing. So the first half of 19 and the first half of 20, we have 15% more membership increase compared to 19. How did we do it? We were very focused, and we make the task for recruiting new members not only the task of the membership department, but made it the task for everybody. And we managed in the crisis to be even more seeable than before. Also, for a leader of a team, crisis is great, because at the same time you can show compassion for your team, you can care about your team, and at the same time you see who is who in a team, and who is really performing well or outstanding, and whom you cannot count on. That's a great asset. And also, by our estimates concerning the German-Russian Chamber of Commerce, we think that the pressure put on us helped us, probably saved around 6 months or 9 months of digital transformation. We were much faster in transforming the chamber, even more digital than we were before. We already had a good base because 2 years ago we started to work with agile management, and people were used to work in teams and not only in departments, and so it was easy to transform most of the stuff to home office. We are here 80 people. All the time during Corona, we had 7 to 12, 13 people here in the office, so we could take care in a good way of our members. And now, since Monday this week, we are working in 2 shifts, so 30 to 35 people in one, some on holiday, but 30 to 35 people in one shift. And so the crisis to us did many good things, and a lot of our companies are doing not too bad. And so I'm very open to the questions of the participants. Great to see that there are people from Germany, Russia, and even Uzbekistan. And so if there are any questions, I'm happy to answer them.
Yeah, thank you very much, Matthias. We're a little bit lack of time, so I would like to ask you questions when and where we can read the results of your survey.
We will publish them the 30th of June. They will be published in a big press conference with TASS in Moscow, and the same day it will be available through our channels at our website and in our morning telegram, which reaches around 85-90% of the decision makers in German-Russian business relationship. And of course, I'm very happy to share this with our partners from RAEX-Expert, so you can send it to your partners and clients.
Great. Thank you very much, Matthias. Sorry for these delays at the beginning. And if the audience, I don't see any other questions here and in chat as well. So thank you, Matthias.
Yeah, goodbye and no problem. I think problem might well be from our side. So everybody, good luck and a nice day.
Thank you. And we are moving to our next speaker, Kirill Kononov, Senior Analyst from the Center for Economic Forecasting from Gazprombank. So, Kirill, the microphone is yours.
Hello, everyone. Let's quickly check the audio. Can you hear me?
Yes, we can hear you.
Great. So to start, I would like to paraphrase an Anna Karenina principle, and that is that each crisis is unfolding its own way. And today I'm going to discuss both differences among current crisis and crisis of 2008 and 2015, as well as perceived differences of current economic development in Russia and other economies. Current recession, as we see it, would likely be moderate, about -3 to -5%. Right now, probably closer to -5 in case of the second wave of epidemics and as the second round of a quarantine. But this decrease would largely be compensated by decrease of imports and an increase of inventories, largely due to an ongoing construction of real estate. On the other hand, as we see it, current slowdown should last longer than recessions of 2008 and 2015, largely because of a more significant impact to consumer sector and more protracted effect on an internal business. Like in previous crises or in 1990s, we expect that Russian labor market should be comparatively stable and unemployment rate shouldn't grow besides 6%, despite the large decrease of activity in consumer and service sectors. This is largely because of strict employment laws and their enforcement in public sector and government-affiliated industries. On the other hand, unemployment rate in informal sector, in private sector, and especially in so-called gray sector of economy, should increase significantly more. And the first polls show a possible increase up to 10 to 15%. As well as some increase in informal economic activity. It is happening largely because the small business, small private business, especially oriented on the service sector, was harmed harder than other sectors, especially an industrial one. And it tries to decrease its regulation by shifting to the gray zone and by decreasing an effective tax rate. We also expect that export income would be comparatively little for the next several years, largely because of decrease of an average annual oil price. On the chart to the right, you can see our forecast for the average annual euro price, as well as the major indicators of the balance of the global oil market. Basically, current drop in demand on oil should be significant enough to form a significant inventories in most large economies. These inventories would be gradually decreased for several years, and this inventory overhang would prevent an increase of oil price for at least 2 years, as we see it, and probably more. The major part of increase of an oil price you can see in our forecast for 2023 and 2024 should come from dollar inflation, an effect of dollar inflation, as well as somewhat the devaluation of dollar that we expect. We also expect, and I would like to note it separately, that in the near future and midterm future, oil price should be largely determined by short-term political and speculative factors, and it would make an oil market differ a lot from the market we've seen for the last 5 years, or probably I should say that we've seen from the year 2010. Back to internal Russian economy, we think that government counter-cyclical spending seems to be limited, at least as of today. And the measures stated, anti-crisis spending, is equal to about 1.5 or probably 2% of GDP annually. And most of these measures are regular government expenses or non-monetary subsidies that won't be effective at supporting the sector of internal economy that was hit most hardly by the current crisis. Probably this limited government intervention is due to a comparatively optimistic government view. The stated goal of GDP growth that the government intends to achieve in the next year is 2.5% of GDP and 2% of real GDP growth in the following years. We think that it might be due to an over-optimistic view of internal events and the scope of the crisis, and expected quick exit from the current crisis. As you can see in the left chart, we expect that the Russian economy won't really return to a quick growth, at least till 2022, maybe later. I would like to also get back a bit and mention that our estimate of OPEC agreement of decrease of oil production in Russia is about 10% in this year, and of course more limited later. And it would lead to an additional decrease of GDP of about 0.5 percentage point, maybe 1 percentage point, and it is already included in the forecasted growth rate. So the current decrease is on the one hand is limited and on the other hand might be more protracted, we are pretty optimistic concerning monetary conditions and their possible development. Ruble exchange rate returned to being strongly correlated with a change of an oil price that it shifted away in the last several years. It shifted due to an introduction of so-called budgetary rule in 2017 that basically led to a condition during which Russian economy lived with an effective oil price of about $40 per barrel. All excessive oil income was stored in national reserves, and they didn't moved to an effective economy. That's exactly why you can see the break of correlation of ruble and oil on the left chart in 2017 and onwards. We've seen a return of this correlation in the beginning of this year in 2 first months, and then a breakup as well in March and April after Bank of Russia has introduced an additional exchange rate interventions. And then when oil price returned above $25 per barrel, but while it remained below $40 per barrel, the interdependency remains strong. We expect it to remain so in the future, in the next several years. So a square, you can see a rectangle, you can see on the left chart, shows an approximate scope of ruble exchange rate and forecasted oil price for several years at least. I should note that a ruble exchange rate of about 70 rubles per dollar is approximately equal to so-called fair or justified price according to macroeconomic calculations or modeling. I would also like to note that current interdependency partly depends on volume of international reserves of Russia that would allow for continuing FX interventions. And current reserves, I'll remind you that they are about $560 billion as of now. Current reserves are enough to maintain this predictable exchange rate for several years at least. Depending on the way of calculation, it's from 3 years to 6 years. The other side of monetary conditions is central bank rate and inflation, of course. We expect that Bank of Russia would continue lowering its key rate or refinancing rate up to 4.5% this year. This continuing easing is based on low inflation and the need of counter-cyclical easing. And many forecasters are expecting a significant decrease these days, exactly a decrease to 4.5 at 9th of June. I am personally not so sure about it, because an untimely large cut of key rate might become a detriment should turbulence return to global financial markets. And the most obvious factor of it is a possibility for resumption of an outflow of capital if a key rate stops decreasing, and a carry trade would stop being profitable due to revaluation of bonds, first and foremost. There is also, I should note, a possibility for further lowering of effective exchange rate and nominal exchange rate, of course, after 2020, should Bank of Russia lower its estimate of neutral key rate. It states that it isn't ready to do it right now because there is no sufficient data available to make this adjustment. But I expect that should political conditions demand, they might move even further to dovish territory and easing their policy even more. And in the end, let me finish with a short overview of the banking sector. Right now, it is regarded as a significant source of an anti-crisis stimuli. A banking system growth should be comparatively large, probably larger than in the last year, the growth of assets. But the growth would likely become a result of first an anti-crisis lending, especially to corporate sector, and also due to effect of re-evaluation of a foreign position of Russian banking system. Its net foreign position is positive, so the valuation of ruble leads to a nominal increase of assets. In reality, banking system meets with a worsening conditions at home because consumer lending becomes less profitable due to tightening of regulation by central bank in the last year. In this year, consumer lending also becomes more risky due to decrease of household income. And as we can already see, banks has put more emphasis on their risk management and has decreased their lending somehow. In these conditions, mortgage might be the most attractive segment of household lending, especially considering government stimulus and its emphasis on infrastructural development, infrastructural stimulation, as well as investment in real estate. A decrease of a key rate also provide an additional stimulus for refinancing in this sector. So we expect mortgage segment of lending to keep growing. Corporate sector, on the other hand, has sharply decreased its long-term lending programs in favor of short-term financing aimed at continuation of current economic activity. We expect that this recent increase of short-term lending would limit an effective demand on new credit from corporates for at least this year. It would change only in the case of an additional government stimulus that would also motivate large companies to get long-term credit. Despite this slowdown, banking system, as we see it, should remain largely stable. Basically, for the last several years, the main agenda of Russian Central Bank was a tightening of regulation and cleanup of the banking sector. It might be exactly what Russian financial system needed during crisis. As we see, banks have a significant reserve of current liquidity, a significant reserves of reserve provisions for possible write-offs. Net foreign position of banking system is positive, and while income of a banking system is low comparably to assets or equity, it is still positive, and it hadn't really became negative not during last crisis, and we not expect it to happen during this crisis. It would assure a stable structure of capital for Russian banking system. We expect that write-offs and decrease of profits would become larger in the second half of the year, more prominent than they were in the first half, than they were in the first quarter. So to sum up, current crisis has largely an external, not an internal cause, both epidemiological and political. And its effects might become smaller in an off chance that external conditions stabilize. Government support, as we see it, is delayed and limited, probably because the crisis is regarded pretty optimistically, probably because of fiscal conservatism that I'm sure should be familiar to our German speakers, listeners. Sorry. Credit expansion and monetary easing look like the main measures of government anti-crisis management. Monetary conditions should remain stable in macroeconomic terms, as well as in terms of stability of banking system and financial system. Some further easing might be introduced later. Midterm consequences should be comparatively protracted drop of consumer demand and business activity that might force government to introduce an additional support measures for internal economy. I personally hope that it will happen. And this unpredictability of events in the future is probably the most telling feature of current crisis. In this proposition, I agree with Stanislav that told a bit earlier that we still don't understand the scope of a current crisis, and it might change should an external conditions or epidemiological situation change. On the other hand, Russia has a large probability for further reactions. So we don't expect a significant worsening of current situation. That's it. Thank you for your attention.
Thank you very much. Thank you very much, Kirill, for your presentation. So today, as you can see, we have the focus from AHK. We have our own focus from the rating agency, and two opinions from Raiffeisenbank and from the Gazprombank. And in order to summarize our today webinar, we have the last presentation, but not least, which is very interesting from the Sergey Smirnov, Deputy Director of Center of Development Institute from the High School of Economics, which is focused on the basically consensus focus. So to summarize today's opinions, we will switch to one of the main source of the consolidated focus on the Russian market. So Sergey, can you hear us?
Yes, can you hear
Yeah,
me?
great. So you can see your presentation, sound is fine, the microphone is yours.
Thank you. My presentation is based on a survey of professional forecasters conducted by our think tank at the High School of Economics, one of the most advanced Russian universities. Some words about our survey. We began this project 20 years ago. Each quarter, more than 25 Russian and foreign experts take part in our poll. In our survey, we ask for forecasts of 18 macro indicators. 5 of them are of the most interest. Here you can see the list of these 5 indicators. Real GDP, CPI, exchange rate, K interest rate, and oil prices. We ask our respondents to forecast them for 7 years and 8 quarters ahead. This is the list of our respondents of the latest survey. In this list, you can see well-known international think tanks. For example, Economist Intelligence Unit, JP Morgan, Morgan Stanley, Oxford Economics, and so on and so on. You can also see less known but highly influential local think tanks. For example, the Center of Macroeconomic Analysis and Short-Term Forecasting is an advice of Belousov. He is a prime vice minister. Or Economic Expert Group is an advice of Siluanov, our Minister of Finance, etc. Presence of the most influential Russian think tanks is the trait and an advantage of our survey. At last, our main results. This recession is likely to be deep but short. At the same time, the pre-recession level of the real GDP will be achieved only by the end of the next year. Here you may see quarterly forecasts. Yes, then as for CPI, experts believe that the situation is under full control of the Bank of Russia. The bank's target for % per year is achievable. According to consensus forecast, there will be a small further reduction of the K interest rate. Experts believe that in real terms, this interest rate will be around 1% or slightly less. Macro forecasters expect for smooth strengthening of the ruble. You can notice that the reality is even more optimistic than their anticipations. Now current rate is below 70, and it's less than the minimum forecast from our survey. And then, as for oil prices, experts believe in a recovery of the oil market. The reality is even better than the most optimistic forecast from our survey. Then, therefore, the main results of our latest survey are: this recession is rather a V-shaped recession, but full recovery will be achieved only by the end of the next year. Inflation risks are low. The situation is fully under the control of the Central Bank of Russia. Probably the Central Bank will lower the key rate. Exchange rate and euros oil price will return to the levels which are quite comfortable for Russia. In reality, the price recovery is even more rapid than the experts' anticipations. At the end, I want to show the main results which are concerned to the long-run perspective. They are: long-run real GDP growth rate is less than 2% per year, so it's not too high for emerging market countries' economies. Consumer inflation corresponds to the current Bank of Russia target. Real key rate is around 1% per year or slightly higher. Exchange rate is roughly stable. Euro's price will be around $50 from the beginning of 22. Evidently, experts do not include the second wave of pandemic into their estimates. If this risk will be high, I think that forecast will be revised. Thank you for your attention.
Thank you, Sergey. Thank you very much. So I don't see any questions from the audience to you. Thank you for sharing us with the forecast. So probably I have just one question to you. When is the next revision of the consensus forecast from the High School of Economics?
As our product is quarterly, the next survey will be conducted in the end of July and it will be published in the beginning of August.
Perfect. Thank you very much, Sergey, for your presentation and sharing this information with us. So we have 4 minutes left. I don't see any questions in the Q&A part. So I hope this presentation was very informative for you. And I hope to see you on our next credit risk webinars, which is already 23rd of June 2020, which will be dedicated to the credit rating of Kazakhstan. And video recording of this webinar will be available soon on our YouTube channel and the link on our website, as well as all presentations from today's speakers also will be published soon on our website, where you can download it. Thank you very much, all speakers, and thank you very much, all participants of today's webinar, and hope to see you soon on our platform. And please read the materials and also check our calendars online. Thank you very much.